Right. Welcome everyone. Time to get started. Just so everyone knows, this webinar is being recorded. Hello and welcome to our webinar entitled, What is the Best Debt Solution for Me? This is brought to you by Northwest's Financial Wellness Series. My name is Denise Kitchen, your host, and I'm one of the relationship managers for the company partnership program. Our department manages the partnerships the credit union has with organizations so that they can offer credit union membership as part of their benefits package to their employees, members, and volunteers. First of all, thank you so much again for your interest in our webinar today. Secondly, I'd like to go over some housekeeping items. Everyone is muted due to the number of participants, and we ask that you hold your questions until the end of the presentation and then ask them via the chat feature when we get to our Q&A session. You can find the chat feature on the bottom of your screen. For any questions that we don't get to address, my email address will be listed at the end, and you can feel free to email me. You can use your reactions button right next to the chat button at any point during the presentation to let us know how we're doing. In fact, we welcome that. Also, we will be raffling off a $25 Visa gift card after our Q&A session, so please make sure you stay tuned until the very end. Now, without further ado, I'd like to introduce Elton Roshi. He is a senior loan officer in our consumer lending department. Elton, go ahead and take it away.
Good afternoon, everybody. Thank you for joining us for this important information that we're going to share with you guys. So today we're going to be discussing what is the best debt solution for me. And this is going to be an overview of the steps that you as a consumer have available to you. And then we'll touch on each one of those. And then we're going to determine which one is going to be the best one for you after we review the material. Okay. So there are 4 options that are available to you as a consumer. There is the do-it-yourself, debt management, debt settlement, and bankruptcy. The first one should be the go-to option before you utilize the remaining 3 options. Although the remaining 3 options should be the last resort, one benefit is you have experts helping you instead of going at it alone. But we'll touch base on those as well. All right. A fun fact, maybe not fun, is that the average interest rate on a U.S. credit card hovers right around 15.91%, according to the Federal Reserve data. So what that means for you as a consumer is for every dollar that you pay on your credit card, 16 cents of it is the interest cost of carrying the balance forward until you pay it off. So if you're averaging 15.9 or higher, then you're paying that rate for every dollar you're paying back to the credit card company. Now, I hear a lot that from consumers that say, well, I wasn't raised with understanding finances. My family did not talk about it. We didn't learn it in school, etc. Well, personal finance is 80% behavior and 20% knowledge. So what we need to get a better understanding of is to delve deeper and understand the root cause of the issues and not just apply a Band-Aid over the symptom. It all starts with how you will get out of the situation by having a game plan. So you don't have to be an expert to get out of debt. So I want to share some figures according to Experian Consumer Credit Review, and this data is from 2020. So we can imagine in 2021, there's more debt out there. So the average consumer is carrying $30,000 in debt, excluding mortgages. So if you have, and then if you count mortgages, the average consumer is carrying about $92,000 in debt, and it's broken down by mortgages, home equity line of credit, vehicle, student loan, personal loan, and credit cards. Now, we can see from these figures that student loans would affect the millennial population more, and then mortgages would affect more so uh, baby boomer, Generation X, and so forth. So the Generation X, those born between 1965 and 1980, they carry the largest percentage of credit card debt at 59%, followed by the millennials, those born between 1981 and 1999 at 50%, and baby boomers, those born between 1946 and 1964 at 46% respectively. So it's not just you are the only one, it's in totality, America has a lot of debt. So debt weighs on your emotions, and studies have been done that show that 46% of Americans say their debt levels create stress and anxiety, which is broken down by each generation. So 64% of millennials feel stress, 52% of Gen Xers, and 27% of baby boomers, because they're in their twilight years and they're enjoying their retirement, and hopefully their debt should be paid off by now. Okay, so how are we going to tackle this? So it's important that you face your debt head on, and writing it down on a piece of paper or Excel spreadsheet will bring it to the forefront so that you can acknowledge before you begin to tackle it. Okay? So you want to make sure that you organize your debt by the creditor, the type of debt it is. So whether it's a credit card, personal auto loan, recreational boat, student medical, mortgage, etc. Balance of each, the interest rate, the payment term, and the length of it, and the monthly payment. So the elephant in the room is the debt that is weighing you down, and avoiding it will not make the elephant go away, but rather just get bigger and more problematic. So writing it down acknowledges it, and then we can get to the next steps. Okay. So now that you have written down your debt, these three repayment strategies are the snowball method, which is paying the smallest debt as fast as possible while paying the minimum on all of the debt. You continue by then paying that extra toward the next largest debt. Consumers like this method because it's small wins, small and quick wins, which boost your confidence. The next option is the debt avalanche method. The debt avalanche method pays the largest or highest interest rate debt as fast as possible while paying the minimums on all other debt. You continue by then paying extra towards the next smallest debt. Consumers like this option because it's a boost feeling of control and get rid of big interest too. The next option is debt consolidation. So the debt consolidation is simply a method that combines debt into one single account. You avoid any other debt until post payoff. The best loan terms should be between 3 to 5 years, and the shorter the better. And the consumers like this option because you get a possible lower interest rate, and one account increases your focus. Now, so you've decided, okay, which method you're going to apply, but it does not end here. Next, we're going to talk about the B word, budget. Just like D, diet, B, budget. It's very important. So the only way to get out of debt and stay out of debt is to budget, budget, budget. Trim from your wants and some from your needs. And your needs could be your cable bill, monthly subscription, cell phone, etc. I know budget is a dreaded word for most people. However, it is successful to become and remain financially independent. So without a budget, you cannot be successful or remain financially independent. So you want to make sure that you use an app that's available out there or create an Excel spreadsheet, or you could do it yourself, on a piece of paper. It doesn't require technology. It just requires you the ability to sit down and do it every month. And a budget is not something that can be accomplished in 30 days. It really will take at least 60 to 90 days to get your budget down, because it takes at least 21 days for habits. But with a budget, depending on how your bills cycle, it just takes some time to get through everything so that you can get familiar with how things are working. The next thing you want to do is you want to halt your credit card spending. So stop using your credit card while you're trying to get out of debt. Using it is not helping you. It's just going to continue the cycle. Sell unwanted gifts and household items. I've done this myself. You can use Craigslist, Marketplace, OfferUp, the old-fashioned yard sale to sell anything that you don't need anymore or are not using. Increase your income with a side hustle. So take advantage of the gig economy. And right now, there's four hire signs everywhere. And so you could have the advantage of choosing your hours, how much you want to work, what you want to work, where you want to work. So the gig economy options would be Uber, Lyft, DoorDash, Instacart, shipped, local stores. You could do consulting online on your own time. Change your habits. This is this goes hand in hand. So you have to stick to the new behaviors by not falling back on the bad ones that brought you to this point. Otherwise, what are we doing this for? Now, there are some other options available out there. So you could do a balance transfer of your credit cards to another credit cards. Northwest offers credit card options as well. Some of the pluses of this are low to no interest, and you can consolidate balances into one payment. Now, typically, balance transfers, they carry a balance transfer fee of between 3 to 5%. At times during the year, there will be offers available out there where you may snag a 0% balance transfer fee. So typically for Northwest, our balance transfer fee is 3%, but periodically during the year, we'll do a promotion where you may get a 0% balance transfer, and that could go for any card company. And typically, these special rates are short term, between 6 to 18 months. So you want to make sure if you go this route, in the time frame that you have your balance transfer, if you go this route, pay it off. So if you're transferring $5,000 and your balance transfer is only good for 12 months, you want to make sure that you're allocating a payment where in 12 months that $5,000 will be paid off. Otherwise, your rate will go to their everyday rate that you would have for purchases and or cash advances. So you want to make sure you stay disciplined with it. The other option that we talked about earlier was the debt consolidation. Those are available here at Northwest, but they're available with other financial institutions as well. Some of the pluses of this are that you may have a lower interest rate and one easy payment. And here at Northwest specifically, we offer loan terms between 12 to 84 months. But as I prefaced earlier, you want to make sure that if you're doing a debt consolidation, you're not doing it more than 3 to 5 years max, uh, because you want to remember the longer you have a loan out there, the more interest that you will pay back, and usually you want to get out of debt faster, quick. Okay. Some of the negatives of a debt consolidation is it can take time depending on the volume of your financial institution, the documentation that's being asked, and not everyone will qualify because just like any loan, there are qualification requirements. So it's not something that everyone may benefit from. So now we're going to talk about the options of last resort. But before we go to those options, I want to make sure that we touch base on that these three alternatives are called options of last resort for a reason because they will affect your credit history. They may affect your relationships with your financial services organization. They may affect your current or future employment because most employers do a credit check. They may affect your rates on your insurance because most insurance companies now do a credit check. It may affect services with the utility companies because most utility companies do a credit check. So you may have to put a large deposit for new hookups. And I want to make sure that you understand that always communicate with your credit union, bank, credit card company, or financial services organization because of any hardship that you're experiencing. Most financial services companies have tools that are available to assist. You just have to ask for the help, and it's better than avoiding the situation. We saw that with the pandemic last year, the options that became available with consumers, in terms of doing uh, forbearance, deferment of their loans, and it did not just range with mortgages, but I saw it with auto loans, with credit card payments, with student loans. So because we want to make sure that we are helping you as a consumer, you have to remember that the financial services organizations, that being banks and credit unions, are not in the business of wanting your house or in the business of wanting your cars. We're not a car lot. We're not a real estate agency. We want to make sure that you as a consumer are successful, and the property that you're paying for, it's yours to keep as long as you pay it. So the options of last resort, I should say, are debt management, debt settlement, and bankruptcy. So we're going to tackle them from the simplest to the most complicated, and we'll also tell you what kind of person each one is best for. That's because each one has its pros and its cons. Once you know those, then you can figure out the right solution for you. Yeah. So debt management. So this is getting expert help on your side. So you want to make sure that you look at a couple of things because not everyone is an expert at renovating their bathrooms or overhauling your transmissions in their cars, which means that not everybody will be the best person that can help you get out of debt. You want to make sure you find someone who has A plus rating from the Better Business Bureau, has been around at least 10 years, if not more, has excellent online reviews from Trustpilot and other sites. This is very important because you're trusting someone else with your money and your credit at the same time. So just like there are terrible CPAs and auto mechanics out there, so so too are these debt experts. Okay. So the next step is you're going to meet with the credit counselor. And typically, credit counselors are nonprofit agencies, but there are some for-profit agencies as well. And typically, you create a debt management plan, which will be paid off in 3 to 5 years. And what happens is the debt management expert will negotiate lower interest and waived fees with your creditors. The the idea behind this is that you're saving money on the interest and fees so that you can catch up and pay off your debt faster. The consumer pays the credit counseling management company one monthly payment. So if you have 5 credit cards you're paying on, you'll pay that management organization one payment, and then they'll allocate your payment accordingly based on how it was negotiated for you. You also want to make sure you understand that you will be paying the fees to set up the plan plus monthly maintenance. Nothing is free. There's no free lunch in this world, and a debt management program, even though most of them come from nonprofit agencies, they still charge a fee. Now, this is all great, but the debt management plan does not address your spending habits and the reliance on debt to maintain a lifestyle. So each, um, so you're only addressing one portion of it. And then you also have to remember that each creditor reports your specific account as managed by a credit counseling program or a debt management plan. And typically, when you're in this program, you're not supposed to be getting any additional debt at this time. Now, as we talked about, there are some pluses that come with this, and one of them is that your payments can be negotiated and cut by 30 to up to 50%. Um, you have negotiated freezes on any late fees, and then you pay one monthly payment a month. Okay? Now, this only will work with consumer debt. So it does not work on secured loans like auto loans or mortgages or home equity line credit. It only will work with personal loans, payday loans, income tax debt, and medical bill. Also, you're going to be given control, as I said earlier, of your finances um, to the middleman, which is the consumer credit counseling agency. As I said earlier, also, please be aware of any hidden fees upfront and monthly maintenance fees. Those have to be disclosed to you ahead of time. But sometimes, depending if you're dealing with an unscrupulous organization, they may add fees as it goes along. Also, expect fewer breaks. What that means for you as a consumer is that if you miss one payment, then your debt management program reverses, and any late fees that were negotiated, any special interest rates that were negotiated for you, automatically cancel, and they revert back to your original rates that you had prior to the negotiation, or higher depending on the credit card companies that have. If you miss a payment, then they have penalty APRs and then fees that they charge you for being late as well. And again, you have less control of your finances because you're in control to someone else while you are not working on changing your spending behaviors. And typically, this takes between 3 to 5 years to complete. And depending on, if you're an inpatient person or you don't see results, if you're a results-oriented individual who needs to see that instant gratification, then this program may not be the best one for you. And, you want to think of a debt management program like the opposite of a crash diet because, it's something that's gradual, something that takes time, and it's something that requires you to make some changes as well. Okay. Now, so the next option we're going to be discussing is the debt settlement. So debt settlement is complex because debt settlement may seem like it's the best option for everyone, but it's not. In a nutshell, what it is you're negotiating with your creditors, and then you'll be paying them a fraction of what you owe. Why do creditors agree to this? Well, because also they don't want you going broke and paying nothing. So something is better than nothing. Okay? And this can typically be done individually or with a third-party organization. And if you're using a company, some charge fees of between 15 to 25% of the total debt you're settling. And you can only qualify if you have a history of missed payments. So that's why I said, this is not for everybody. This is for individuals that have had a financial hardship in their life and they have many missed payments with that financial organization or company, and this may be an alternative for them. Again, debt settlement, it's a long and complex process. So the debt settlement company will start out with a free debt analysis to see if it's the right solution for you. If it is, then the debt settlement company will set up an escrow account for you where the funds will be deposited. This is a secure account where your funds will be kept until your settlements are reached. This may take a while because, again, nobody wants to give you a free lunch, and these companies are going to try to get as much from you as possible at the end of the day. And also, do be mindful that creditors might or may outright refuse to settle. This is not something that is a right. It's just an option that is available. And some companies will settle, some will not. So don't be alarmed if the company does not. And remember, the debt settlement company will take out its fee of what you paid into the escrow. Now, it does damage your credit score. How so? Well, because it's going to be reported on your credit report as settled for less than full balance. So even though it may show as paid, it will still reflect that you settled it for less than what you originally owed. So that does have a negative impact on your credit score. And as I said earlier, we know that the credit score, the credit history is so important nowadays because it's intertwined in our lives in everything that we try to, even like if you try to to get a cell phone now, they have the those 0% options for 24 months to pay these $1,000 phones. Well, that can impact it because not everybody will qualify for that 0% option if your credit is less than stellar or has blemishes on it. And debt settlement will stay on your credit report for 7 years. So if you want to buy a home, if you want to buy a car, um, your interest rate may not be the best because of these accounts that are reporting on there. Okay, just like anything, you want to be aware of scams. Um, the most dangerous part of debt settlement has nothing to do with actual debt settlement. What that means is scammers who try to steal your money, people who try to pose as debt settlement agencies. Some charge steep fees up front, which is actually illegal. Please remember this. You do not get charged a fee up front. This is illegal. By law, debt settlement companies can't charge any fees until a settlement is successfully achieved. And those fees should be a small percentage of the original amount you owe. But as I said in the earlier slide, some of them can charge between 15 to 25%. So you want to make sure you do your homework. Whether you go with a debt settlement or debt management plan, you'll pay a fee to these companies that will be managing the work for you. And unscrupulous debt settlement companies don't care about that. Some will even take your money and then not actually help you at all. So you want to make sure, again, you seek a reputable debt settlement firm using the same techniques we discussed earlier regarding the debt management plan. Okay, so the last word is bankruptcy. This is another big B here. Bankruptcy should be a last resort. There are several types of bankruptcies available out there. There are Chapter 7, which liquidates all of your debt, and Chapter 13, which is similar to a debt management repayment plan where the courts negotiate a plan and you end up paying your accounts over a 3 to 5 year period of time. And you also want to make sure you understand that a bankruptcy will stay on your credit report for 7 to 10 years. And typically, in the first 12 to 24 months, uh, you may not qualify for loans with financial services organizations depending on the guidelines they have. But typically, the first 12 months, it's really hard. And typically, you shouldn't be going out there getting debt anyway because you just came out of bankruptcy for a reason because you eliminated debt. And life happens and we understand that. So bankruptcy, may not be right for everybody, but there are hardships out there that happen where a family had a large health scare and it just wiped their savings, or you know a spouse or the breadwinner, if they're a single household, lost their job and were not able to get back on their feet. Things happen in life, but as I said, there are many steps before you get to this. So you want to treat this as absolutely the last step for you. Okay. So if you have any questions or you would like to discuss your particular debt situation, please call us in our consumer loan department at 703-709-8900. and press option 4, and one of our experienced loan officers will be able to further assist you with any questions. And you do not need to have an application on file for us to assist you with questions or to provide you some financial guidance.
Awesome.
Okay.
Great job. And thank you so much for giving us all this wonderful information, Elton. Really appreciate that. So now
Absolutely.
our Q&A session. So you get to ask your questions in the chat feature. So I'm going to give you a few minutes to open up your chat feature, get your typing fingers ready. I have gotten some already beforehand, so we're going to start with those until you guys type in your questions in the feature here. So the first questions I received was, are there any good apps that you recommend for budget management? Now, I was curious about this too, and I love that website called nerdwallet.com. So going in there, it recommended Mint, Good Budget, and a few other ones. Are there any other ones that you can think of, Elton, that are really good budgeting apps?
Yeah, those are the primary ones because typically there are free ones available out there, but there are other ones that will try to charge a fee to make it less of a hassle for you to do your budget. But again, like, I'm from the school of, why should I give someone else my money if I can do it myself? So try to stick with the ones that are free, or you could do it simply as an Excel spreadsheet. I believe in Excel, if you do a search word for budget, it should pull up some options for you as well. But yeah, any free app works. It does not need to have the bells and whistles of tying into your account to pull all your transactions. If you choose to do that route, then go ahead. But again, you're paying extra money.
Okay. Excellent. So Francis said he missed part of what was said. So I said, Francis, that you can use Mint, Good Budget, but for instance, you can go on nerdwallet.com and it'll give you the different types of apps out there for different things that you're looking for. So you can definitely find one that works for you. All right, let me go into the chat here and see what other questions we have.
Oh, I also want to add something to Denise.
Okay.
Also, to your financial services organization, depending on their online banking features, they do have like a budgeting section as well too.
Okay, great. Thank you so much. And then this may be a question that we may have to take on the side, but somebody's posing a question here. I recently completed a bankruptcy. I have kids. I need to get college paid off and other small debts. What program would you recommend for me at this point?
So the program that I always recommend is to do it yourself option, because again, that's something that you can control. And again, you want to make sure you list the debts that you have and then look at your budget to see how you're going to allocate things. Because if it's something that you can manage on yourself, by yourself, then do that. I mean, you don't need a third party to pay additional fees for something that you can control yourself as well.
Sounds good. And then someone is asking, is Lending Point a legitimate resource?
Lending Point. I'm not familiar with that.
I know Lending Tree.
Organization.
I'm not familiar with Lending Point.
Yes.
So let me do some research on that, Risha, and I will get back to you on that one. Hold on, let me write down your name real quick. And then we'll do some research and get back to you on that, okay? Then another question we had beforehand was, who do I contact about questions other than the Consumer Lending Department?
Yeah, absolutely. So we have available to you, you can visit a branch that's convenient to you. You can call our member service center. And again, the 703-709-8900, option 4. And then any one of our experienced loan officers can assist you with any questions that you have. You don't, have to, come to us directly first.
Sounds good. Allison, I saw your question. I am going to copy you on that answer about lending point as well. No problem. Let's see if we have any others. Oh,
I have one from Kim.
Okay.
She wrote, what are potential employers looking for on your credit file? So typically, my experience has been that they do a credit check. So a full credit check, is checking how you're paying your accounts. Do you have any collection items, charged off items, bankruptcies, judgments outstanding? So those types of things. That's what employers look for, and it also depends on your specific employer too as to what they're also checking. But I do know that every single employer, that I've worked for, the credit check, has been something that is required, and I've worked for non-financial institutions as well. So it's not just financial institutions that ask; it's the gamut of organizations now that use this as part of your employment process.
Mm-hmm. All right, great advice. A couple of people have asked whether we will distribute the slides. We typically don't do that, but I will send you a link for the YouTube channel, our YouTube channel, where the webinar will be posted. So we'll be sending that out along with a survey about the webinar as well. Another question we've gotten in, should you consider a consolidation loan for less than the amount owed?
Well, that would fall under the debt settlement if you're trying to consolidate for less than the amount owed. So typically, if you are negotiating with a debt with the creditor for less than the amount owed, then you're wanting to come and do a loan. Is that my understanding?
Let me see. Clarification, this is for a loan, but approval was less than the amount. How much less, Risha?
Got it.
Yeah. Was it significantly less or just 10,000 less?
Well, you also have to understand too that anytime you do a request for a debt consolidation loan, so for example, the maximum loan that we offer here in Northwest for a personal loan is $25,000. However, not everyone will qualify for a $25,000 loan because there are guidelines and criteria they go into being able to. Do you have experience with that amount that you are requesting? The debts that you're wanting to pay, do they total 25,000? Because just because you apply for 25,000, your debts on the credit report may total 15,000. Well, a debt consolidation loan is that it's going to pay the debts that are outstanding. So if you apply for 25,000, but then the decision is only for 15, then it's because we only see $15,000 in debt that is being paid on the credit report, unless you have other debts that don't show up on your credit report, like a medical bill or something else like that.
Gotcha. But generally speaking, the financial institution will want to consolidate the whole amount, and they're just not doing it because they're not seeing the information on the credit report. Is that correct?
Yeah, my experience. Yes. So my experience is this: that that normally financial institutions should not consolidate a partial balance, because what that does is, so for example, say that you have a credit account with XYZ organization for 25,000, but then your bank only gives you 15,000. So now you have a loan for 15,000 plus a partial balance of 10,000 outstanding. What solution did that offer you? It gave you no solution.
Right.
And typically that's high risk at the same time because you're carrying two debts at the same time, as opposed to just as opposed to just one single account.
Mhm.
So normally, financial organizations will not do partial payments or partial loan amounts to pay off like a large balance.
Gotcha. And then we have an anonymous question. What about repayment of student loans? I'm assuming that the question is whether or not it would make sense to consolidate those. I guess it all depends on the interest rate you have. Usually student loan rates are lower than what a consolidation loan would be able to offer. Is that right?
That is correct, and typically you cannot consolidate student loans into a personal loan because those are federal loans or private loans that depending how they took them out. So typically those have to stay as student loans. Like I know specifically at Northwest, our personal loan request cannot be for student tuition or student loan consolidation. What I recommend you do, and you also want to check this, is depending on the type of student loan that you have, if it's a federal loan or a private loan. If it's a federal loan, you want to make sure that if you do a consolidation, that your federal protections are still enforced if you do a consolidation within with another student loan organization. So you want to make sure that you do your homework on that as well. And there are options available to consolidate student loans into one payment. But again, you want to make sure that depending on how your student loan is set up, that you are protecting yourself of your rights too.
Excellent. Thank you so much, Elton. And we are just about there with our time. So guys, if you have any more questions, please feel free. The number is listed for our loan department. Write that down. Make sure you have that. And of course, you can always email me and I will make sure that our lending department will answer your question and I will get back to you for sure. Okay. So the next item we're going to is the raffling off of our $25 Visa gift card. So thank you so much for hanging in there with us for this long. And the question I'm going to ask, so get your typing fingers ready. And whoever answers this question correctly first will be our raffle card winner, okay? Or will be our Visa gift card winner. So the question is, Elton talked a lot about how to organize your debt. So what is the first step you should do when you're organizing your debt? And this could be a multitude of different answers. So let's see what we have.
Okay, someone already wrote, oh, wow.
A lot of really, yeah, okay. So the first one who basically said what we were looking for, which
Chris.
is writing it down, is Risha Berry. So yay, Risha, you are the proud winner. I have your email address from your registration, so I will reach out to you to get your mailing address and I will be sending that Visa gift card to you. Okay, so yes, listing your debt in any way, shape, or form, like Elton was saying, writing it down by hand, putting it on an Excel spreadsheet, using one of the apps, whatever method you choose, that would be the first step to kind of acknowledge that you have it. It also kind of, gives you a little bit of focus, in my opinion. So, all right. Thank you so much, guys. I really appreciate the engagement and everyone's messages. Again, write down my email address. It's dkitchen@nwfcu.org. And again, you have my personal assurance that I will get an answer for you. Okay. Or you can go to or call the lending department or to one of our branches and talk to a loan officer there. Okay. Thank you guys so much for your time. Thank you, Elton, for being my presenter today. I appreciate it. And we will see you next time.
Thank you, everybody.